This hearing marks the 412th hearing of this committee and subcommittees on the issue of ESG. Shareholders are literally the capitalists. They should be able to decide, and they should be given the information so that they can decide where to invest their money. The Republicans are waging war against the capitalist market that says investors get to decide. They are waging that war on behalf of entrenched managements who don't want the real owners of the company to tell them what to do. We are told that we should have a variety of avenues for raising capital. One important avenue is for climate investors. These are not fringe investors. They're a huge portion of and a growing portion of those who are investing their capital. And this seems like the purpose of these hearings is to tell climate investors to go to hell or to go to Europe, where they can get the information should they choose to invest in European companies. Even investors who do not give a dwit about whether they leave this planet in better shape for their children and grandchildren are going to want some information before they invest in the Maldives Coconut Plantation Corporation, because the Maldives is only about 4 feet high above the water. And maybe that's an investment risk. I've read these documents that go through your division. They list dozens of investment risks. This is clearly one that needs to be examined. I do want to point out that, as the only CPA on our side, that Scope 3 is very difficult to create anything that's anywhere close to reliable. It took the CPA profession 200 years to develop the systems we now use to define and tabulate, audit, and report information. And to try to do Scope 3 is something I haven't heard professors of accounting theory or persons who have headed technical review departments in major CPA firms think that we are quite ready to do. It's not just ESG, we also need W. Investors want to know about the workforce. It's the most valuable asset. This 100 years ago, 90% of the value of a company could be seen on the balance sheet listing hard assets. Now, 90% of that value is not in the hard assets. It's in things like the training of and competency of the workforce. And we also need disclosures about China, because it's a risk to many companies that we may see a cutoff or a diminution in our trade relationship with China, and because some investors don't want to see us become dependent upon China. Shifting over to another issue, your division is coming up with conflict of interest rules. As we've heard Republicans say, they're very upset that the SEC is doing so much work so quickly, and I can understand that. We mandated that you draft these regulations only 13 years ago, and in the blink of an eye, here they are. You're moving too fast. 13 years is not long enough. But it is important, much as I've wanted these regulations to move forward, that they be moved forward with care. I'm concerned that ordinary hedging of interest rate risk might be regarded as somehow violative of the conflict of interest rules. And I would hope that interest rate risk and some other things be carved out and not be considered something that could lead to a charge of a conflict of interest. And I yield back.